Hi friends, so I wanted to provide a quick update on my thoughts about Bitcoin and what I've been seeing in my analysis and where I think the price is more probable to go next. So first, what I want to do is look at Bitcoin from its inception back in 2009 all the way to today. Now I'm on a monthly chart. So each of these candles here represent a whole month of price action. Over its total lifespan, as you can see, Bitcoin has gone up a lot, come down, but overall gone up exponentially over time. So, yes, it does decrease quite a bit during what we call the bear markets. But overall, Bitcoin has been a phenomenal store of value. So, investing in Bitcoin, people increase the value of their holdings over time. Whereas with the US dollar, for example, I don't know if you're aware of this, but the buying power of the US dollar has been declining over time. So between 1900 and today, the buying power of our US dollar has gone down more than 90%. Now, with Bitcoin, you see here that the cycles are roughly 4-year cycles. And these vertical lines here are what we call the halving. The halvings happen roughly every 4 years, and it's built into the Bitcoin algorithm. And what happens during the halving events is that the amount of Bitcoin that is distributed to miners, which work to keep the network running, is decreased in half. So it's cut in half. So what they're getting is half of the Bitcoin they were getting before the halving after the halving happens. And what that does is that it creates a built-in scarcity into the model. And as you can see here, what happens to the price after the halving events is that it goes up exponentially. So, for example, in the first cycle after the halving, price went up 7,100% to the next top. Then from that top to the bottom went down 88%, yes. And the previous top to the bottom went down 93%. So that's a huge decline. However, those that held on, as you can see, the value of their money has gone up exponentially. The second cycle, the halving happens, price goes from the halving up to the top 4,000% up. And the last cycle that we had, from the halving to the top, price went up 355%. Now, because as you can see, there is a diminishing return on the increase of price from the halving to the top with each cycle. I'm estimating here that after the halving, price is going to go up another 100%. So as you can see, it already went up from the bottom. It already went up 600%. Oh, I'm sorry, it would be 600% to the top. But from the bottom to today, price has already gone up 239%. So if we take the price from now, where we're at now, to the top of the halving, and if we just figured that price is just going to double, so if it only goes up 100%, then let me just be more specific, exact here. So, okay, let's do 106%. Even if it only goes up 106% after the halving, meaning it doubles, we'll be at roughly $102,000 by the kind of top of this cycle. The upcoming halving of this cycle is in April. So we're in February, we're mid-February right now. So in just 2 short months, we're going to see the halving happen. And as you can see, after the halving, the price will go up quite a bit. and I'm estimating that it will at least double. So 100% to at least $100,000, or maybe a little bit less than $100,000, but roughly double from the price it's going to be at the halving. So all good news. But as I said yesterday in the Discord, what I've been watching to know whether or not price is going to see a little dip in the coming days and weeks or not is, well, let me go back to the logarithmic chart really quickly here. So what I wanted to say is, as you can see, during the uptrends of the Bitcoin cycles, we still have some dips that happen. These red candles, these monthly red candles that happen during the uptrends, they're pretty sizable moves. So a lot of them are between 20 and 40% declines. And so, for example, right here, if you just measure it, it went down 40%. We're not going to measure for COVID because that was a special circumstance. But if you figure from the dip, the high of the dip to the low here, 22%. And we just recently had a 22% dip. If we go into the weekly, you'll be able to see a little bit better here. After the Bitcoin ETFs were launched, we went from the top of about 49.3 all the way down to 48.5. And so we had roughly a 21% move down. And these moves down are to be expected even during the upward parts of the Bitcoin cycles, so the upward trends of the Bitcoin cycles. And I'm expecting to probably have another one of these corrections or dips before the halving happens. But with all the bullishness that's happening in the market, with these big institutions such as BlackRock launching their ETFs and buying 12 times more Bitcoin than the Bitcoin being mined on a daily basis, I'm not sure if our corrections or dips are going to be as sizable, and I'm not sure whether we'll have much of one before the halving this time around. But as I said in the Discord, what I was watching for is we had, if we look at our weekly candles here, first of all, if we look at the Fibonacci retrace, so if you take the Fibonacci tool from the previous high to the low of this cycle, and you go across, you see these lines, and price seems to move, find support and resistance at these key levels. Well, up until now, in all of these previous cycles, price had never gone above this golden zone, which they call the Fibonacci golden pocket, before the halving, in none of the other cycles. Well, this cycle, we confirmed a weekly candle that closed above the orange line here. The orange and the gold are considered the golden pocket. And we closed the weekly candle above that level, which is a really, really big deal. It's very, very bullish. The other thing I was looking at is whether or not the price would close and find support on a weekly time frame above our white channel here. So the price has pretty much been staying within this channel since back in March 2023. And it dipped below the channel for several weeks, starting in August and going all the way to October. But then come October, we went back into the channel, and we've been going up and down within the channel. And just recently, we broke out of the channel. So 12th of February, that weekly candle broke out of that channel. And I wanted to see whether or not it was holding above the channel, and it did. In fact, if we zoom into the daily time frame, you can see here that the price has been closing consistently right on top of this channel for 4 or 5 days now. And then it closed the weekly. So that's all very, very good news. That's all pointing towards more bullish probabilities. And if I were to be trying to get into the market right now, what I would do is I would set some buys at key levels. And I'd start off my buys at the 48, I would say 48.8 level. So it set 30% of my portfolio to buy here. I would set another 30% to buy at about 50,500, and another 30% to buy right on this trend line at about 51.5. That's what I would do. But I'm currently not buying. I'm currently all into the market. I've been getting into the market since January 2023, and I've been slowly getting back into the market. So when we bottomed out in January, was it January, November? No, I didn't get in until here, January 2023. So when I was sure that it had bottomed, and we were looking at higher highs and higher lows, then it was pretty clear. So we started getting back in in about January. So we're all in right now, and we're expecting, even if the price does dip, for it to either find support at the top of this channel, or if it loses support at the top of the channel, then what I'm expecting is for it to find support on this golden pocket zone. So at 50,600 roughly, 50,500. And if that level doesn't hold, then I'd be looking at the gold level, which is at 48.8 roughly. And if that doesn't hold and price breaks below that, then I'd be definitely looking for a bounce on the bottom of this white channel at about 45,200. So you could set 20% of your buys, 10% down there. You can always change your buys. So you can preset them, but then change it around as needed. So if the price is, coming below the 48.8 level and not able to come back up above it within a week or two, then I would definitely look to set my buys lower. Set some buys lower at the bottom of this channel here. The other thing I wanted to take a look at is some of the patterns that Bitcoin has broken out of, and what I'm expecting to see in terms of next levels in price. And if you look within the Fibonacci sequence, then usually when price goes above one of the levels and finds support above the level, then we're looking at the next level as the target. And in this case, it's about at 57.8. So the 0.78 Fibonacci level is at about 57.8. Yeah, 57.8. So it's very likely that price is going to go and try and find this level here and then find some resistance here. Now, traditionally, resistance at the 0.78 is not as strong as the resistance of the golden pocket. This is the strongest resistance and the strongest support. So that 57.8 is something to look out for, but also in terms of pattern breakouts. So firstly, if we look on a daily time frame, Bitcoin was forming this, what we call a broadening wedge formation. So like a gramophone formation. And when breakout happens of this type of formation, then price generally goes up about, so from the point of the breakout, about 50% of the move between the low of that level and the high point of the gramophone. So if we go 50% roughly, and then we take that arrow measured move and we take it from the breakout point to the top, what do we have? We got about 57.5. So there's some confluence between the target measured move of this broadening wedge breakout and the next Fibonacci level, the 0.78, which was also at about 57.8. So I'd be really, if we hold this level, if we hold the 52,000 area and we start moving up, I definitely would be confident in saying that $57,000 will not be difficult to reach. Also, if we look at some other patterns, so Bitcoin formed, if I look at the weekly, it'll be easier. Okay, so Bitcoin starting in April 2022 and ending in August 2023, it created this cup and handle formation here. As you can see, the cup and the handle. And when price breaks out of a formation like that, like it has here, then the measured move is basically about 75% of the distance between the bottom of the formation and the top of the formation. So if we go about here and then we take that arrow, we put it here. Okay, so price basically, based on this breakout, was targeted to reach at least $50,900, which we've already done. But also, after it broke out of this cup and handle formation, it also broke out of this, what we call a head and shoulders formation, the purple lines here. So you can see here a left shoulder, a head, and then a right shoulder. And the price broke out of it right here at the neckline. The neckline is the dotted lines here, the purple dotted lines. The measured move of this breakout, of this pattern, would take us up to $108,000 roughly. But I don't expect that price to be reached quite yet. That's a longer term target. This is quite a big pattern here that took quite a long time to form. And I expect price to do some zigzagging up and down and sideways for some period of time before it reaches that level. In fact, I would say that we won't reach that level until up to a year after the halving. So if we go all the way here to April 2025, I'm personally expecting this market to top out in 2025 towards October, September, November timeframe. But I'll be doing more analysis along the way just to make sure. And I can show you guys in a different video what I'll be looking for as cues to exit the market. But for now, the important thing is to be in the market, in my opinion. In my opinion, right now, you're much better off being in the market than not in the market, because you will start to hear even more about Bitcoin's price going parabolic as we come closer to the halving event and after the halving event. So personally, I would want to be in this market. I mean, what other market do you know of that will give you, that can double your money in a year and a half? I don't know of many. If you guys know of some, please let me know. Obviously, the AI market has been booming, and those stocks have gone up quite a bit. And we'll have to see whether they continue going parabolic or not. But for now, Bitcoin has been the single best performing asset ever in the history of assets. All right, so we're looking for the next levels that we're looking for are going to be here. So if price breaks below the 52, if it closes the next week underneath this trend line, then I would expect it to come down to about $50,000, $50,200. If that level holds, then we might bounce back up from there. If it doesn't hold, then I'd be looking at price to come all the way down to 49,000 roughly, a little bit higher, 49.2. And this level here is pretty strong support usually. So we should see the price hold within this golden pocket area. But if it doesn't and it falls below the golden pocket, then I'd definitely be looking at the bottom of this white parallel channel for the next level of support, for the next level at which the price will bounce back up. And that's going to be at about $45,000. All right, so the other thing that I wanted to show you guys and go over is the oscillators. So if we turn on our oscillators, we can see here that on a weekly level, the oscillators are doing very well. They're looking quite bullish. The stochastic RSI here, excuse me, the stochastic RSI, the blue line is on top of the red, which is always a very bullish thing. The movement is towards the top, and we're quite a ways from reaching a top of the stochastic on the weekly at 100, the 100 level. So that's all very bullish. And the RSI is looking quite bullish as well. It's pointing upwards. It's above its moving average. Money flow index also looking quite good. So the stochastic RSI and these oscillators, what they're doing is they're pointing at the momentum in the market. So those are doing well on the weekly level. Now on the daily level, if you zoom into them on the daily level, you can see here that they're starting to turn down. So is that cause for concern? No, not yet, but I'm keeping an eye on it. What I'm looking for is whether or not the stochastic on the daily is going to go below the 20 level. The 80 level, excuse me. If it goes below the 80 level, then the likelihood of it going all the way down and for price to see a correction goes up. However, when the market is extremely bullish, what happens, like what happened here, is that price never goes below the 80 level and just bounces from there, and a upswing in price starts all over again. And then we reach a top and it kind of fizzles out and then it goes back up. So I'm watching to see within the next few days whether this stochastic RSI closes below the 80 level. And I think I'm going to leave it at that for now. Thank you guys, and much love.